Hello, everyone. My name is Roz with Done Right Bookkeeping Services. What I do is share different tips and strategies for small business owners regarding bookkeeping. I also give tips and strategies regarding how to navigate through QuickBooks. I am a certified QuickBooks Pro advisor as well. So if you're in need of a bookkeeper, you can actually schedule a consultation with me. It's free of charge, and I can actually gather some information about your business and see how we can actually assist you with your bookkeeping needs. All right. So if you find value in this video, go ahead and like and comment and follow or subscribe to wherever you may be viewing this video. So whether it's Facebook, LinkedIn, Instagram, YouTube, regardless, go ahead and give it a thumbs up and go ahead and comment and subscribe and follow the channel. All right. But with that being said, let me go ahead and share my screen with you. I have a quick presentation and we're going to be talking about what are COGS. So you may be just starting out with your business and you're like, you know what, these different terminology and things like that, I need to get familiar with it. So we're going to talk about what COGS are. So before I go there, I always give my disclaimer. I'm not a financial advisor or tax expert. What I do is share different tips and strategies regarding the information I just shared with you. And I always encourage people to seek out professional advice based on their situation. All right. So what are COGS? COGS, also known as cost of goods sold. So wherever you see that, you know what it is now. So it's the purchase of goods and services. So depending on what type of business you have, let's say you have a t-shirt business, maybe you have a cell phone business, whatever business you have that deals with inventory, you know, you're going to be looking at COGS, the cost of goods sold, because you may be buying that wholesale, right? Obviously, you're buying those goods wholesale from the manufacturer or whomever, and then you're going to, you know, maybe you're going to enhance it, maybe you're going to print on the t-shirts and you're going to resell it at retail cost, right? Retail cost. So that's what COGS are. Cost of storing inventory. So this is part of your COGS. So you have to factor in, you know, how are you storing this information? How is it being shipped? You know, do you have fees for the shipping? I'm quite sure you do. And any other miscellaneous cost that's related to the COGS. So we're going to look at an example because I love to not just give you the information, but look at an actual example. And this could be a real life example. And you can plug in whatever business it is. But we're going to be looking at a t-shirt business. And this is going to be for 1 year, right? So to the right, you'll already see what we know. So this is what we know. By the end of the year, this is what we know. The revenue is $190,000. And I have abbreviations just to keep things simple. So R is revenue. BI is beginning inventory. These are just abbreviations that I actually put in here just to make things easier to read. Beginning inventory, as of January 1, is $20,000 worth of inventory. P is purchase during the year. So you made some additional purchases of $50,000 worth of t-shirt goods. EI is ending inventory as of December 31st. That inventory, now you've sold so much because you got your revenue, right? Now, at the end of the year, as of December 31st, the value of your inventory is $5,000. All right. So let's look and let's plug in some numbers. So the gross profit is equal to R, which R is what? Revenue, you got it, minus the COGS, which are cost of goods sold, right? So the cost of goods sold equals the BI. The BI is beginning inventory, plus the P, right, is the purchases, minus the EI, which is the ending inventory, right? So let's plug in some numbers. The COGS equals 20,000, which is the beginning balance or beginning inventory. 50,000, I didn't put the comma in there, so sorry, but 50,000, which is the purchases throughout during the year. And then the ending inventory is $5,000 in value. So that comes out to $65,000 in value of COGS. Looking at the gross profit equals R minus COGS, right? So if we look at the gross profit, we want to know what our gross profit is. We know what our revenue is, but what is our gross profit? It's 190,000, which is our revenue. So that's what we taken in, but we have to factor in what our cost of the COGS were. That was 65,000, right? So when you do the calculations, that's 125,000 of profit that came in for this t-shirt business. That's what we have. So that's how you factor, or that's how you calculate your COGS and, knowing your ending profit. So I leave you with a quote, motivation. I love to leave motivation or inspiration. The surest way to reveal one's character is not through adversity, but by giving them power. So think about that for a second. Someone who has never had power, they have to stay, pretty much humble, right? When they get that power, because how are they going to treat that other person next to them? Are they arrogant and things like that? Or are they still confident? I'm not saying they're not confident, but you'll see their character changed in such a way that now they're arrogant, or do they still pertain a persona of confidence, but yet they're not arrogant? So with that being said, guys, I want to leave you with this. If you want to delegate those bookkeeping tasks to someone, you can actually schedule a consultation by visiting our website, donerightbookkeeping.com, or you can actually click on the link in the description area and schedule a call. All right. But with that being said, I hope you found value in this video. Go ahead and like, comment, subscribe, or follow the Done Right Bookkeeping or the Roz Bennerman page, wherever you may be seeing this. And with that, I will end this with much success to you as you continue your business, or if you're starting your business. Bye-bye.